Hey, welcome back. If you like watching people look at stock charts, you're in the right place. And if you like BNN Bloomberg's Market Call, I do a daily review of the guests' top picks. So be sure to stick around and have a look and let me know what you think. Like, subscribe, leave a comment. Am I, right, wrong? What do you think? Let's get the conversation going. So it is the 4th of July. Happy Independence Day to our American friends. The TSX right now is up, quarter of a percent. Fun fact taken from Brooke Thackeray's book, which is an excellent book. I highly recommend. He does kind of a yearly investor guide where he goes through, a lot of tickers and companies and looks at the seasonality of stocks. And he's a technical analyst as well. So he, has some really great insight. I, on the other hand, am not a technical analyst. I'm just call it an armchair analyst. So this is not financial advice. So please do your own due diligence, all of that good stuff. So fun fact, when the US market is closed, the Canadian market usually is up. So on Independence Day over the past, 45 years, we see an average increase of 0.22%. And it's over, our market is up 63% of the time on Independence Day. So fun fact there, we're usually up when they're closed. So, and it's usually light volume as well when only Canada's open. So we're so dependent on the US here in many different ways. So just thought I'd share that interesting little tidbit of information. So so we're, 0.25% on the day, which is, quite decent. So Keith Richards was on BNN Bloomberg today, and I always love when he's on, obviously, because he's a technical analyst. I, consider him a mentor. I've read his books, and I watch his blog and his YouTube channel and stuff, and he has some really, really excellent insight. So Keith, if you're watching this, I love your style. I love your content and all that. So well done, and keep it coming. So he had a few picks. I'll go through a few of the past picks as well, since he did pick cash as one of his top picks. So I'm not going to look at cash for obvious reasons. But we'll take a look at the others and a few of the past picks as well. So we had the I'm having trouble talking today. So emerging markets ETF by BMO, the ZEM. So what do we have here? He likes it as, breakout, long base. It's been breaking out. Well, we could take a look at a longer term chart here. He bought it, I believe, around here. So, you could draw the same line as he drew, right? Let's call it 19. And he probably look a little bit around here. So, call it 20. We like round numbers, right? So call it $20. It did retest here. I would probably even say 18, 19, because it did retest the 19 and then it broke out. But, you can draw the lines however you want. But, after a long basing pattern, as he said, I like the saying, the longer base, the greater the case. So, we have a long, that's 2 years here. So, and he sees it as a cheap commodities play as well in these emerging markets. I'll just take a look at the holdings here just for the fun of it. We have Taiwan Semi, Tencent, Samsung. So it's very, Taiwan, Reliance, Pinduoduo. So, quite tech heavy, financial heavy. Some consumer cyclicals, some basic materials, some industrials. So interesting ETF. He's buying it. He bought it on that breakout. We'll probably have another air pocket here until probably around the 23, where rejected the 23 right before it sold off back in 2022 Feb. So in my humble opinion, I'm obviously not going to, he didn't really mention what his price target was, but just looking at it here, we're breaking out. Probably going to have some resistance around 23. Probably a little bit more at that 25 level if it makes it up there, but he does like these sideways stocks, right? And especially the breakouts. So this is going to, that 20 level is going to act as support as well. So, nice looking chart, nice looking breakout. probably a good one to trade around. So next, he mentioned cash, but he did mention Canadian Western Bank. They sold out. They sold out of Canadian Western Bank because it did have this gigantic pop following the National Bank acquisition. So they sold it. Now they didn't reinvest it yet. So he's sitting on some cash. I mean, when you have an acquisition story here, usually it flatlines, but in this case, we know, if you're following Canadian Western Bank at all, their buyout was around 52, I believe. So you have a lot of room here to continue going to that 52 level. There is some risk. If the deal doesn't go through, this thing could break down, and you could be sure that it's going to fall right back to that, 27-ish level, back to where it was, right? So, but it's a small bank. It's, there's not much competition. It looks like it's going to be a pretty smooth transaction, the national deal. So yeah, I mean, you probably could have held it until, 52, or taken the national shares, but he's a trader. Like you mentioned, they're usually in between 6 months and a year. So I could see why they would take profits, especially after a monster move like that. So figured I'd take a look at Canadian Western Bank there as well. Cameco, I've been in Cameco. I like selling puts on Cameco, full disclosure. I don't have any positions on now, so it'll be interesting to take a look at. So I haven't looked at it in quite some time. I was trading it a little while ago. But, I mean, I like it. I mean, uranium, we need different sources of energy. It's, considered somewhat clean energy, minus, some of the downfalls of nuclear waste and all that good stuff. But apparently there's a lot of technology that's being improved and a lot of interesting developments in the space in terms of reactors and things like that. So interesting place to be. Expensive stock as well, but, they're in a good space. He sees just a very obvious uptrend here, which you're not going to fight, right? It's bounced off the 200-day. 200-day is a nice place to acquire some shares, right? So if this thing continues going down, I mean, if you look a little bit closer, you could draw your lines. You could see that we're in a bit of a downtrend right now. So where is it going to head next? Hard to say, but we are in kind of a downwards pattern right here, going down, right? So kind of in the middle of it now. I'd like to see it get up above, that 70 level probably, because that'll coincide with a lot of the moving averages, this downward, the upward line of this downward trending pattern here. So if we get above that, we're probably off to the races again. But if we go back down to this level, which is very possible with this security, it's quite volatile. So I wouldn't be surprised if it comes back down to the 200-day. That'd be a nice place to, start selling, selling some puts or, whatever to get into a position. We could look at the options chain if we want. Since it's a holiday, why not? We got 43 days to expiry. The 62s, we did see some, 62 is kind of around that 200-day moving average, right? So we look at the options chain again at 43 days. Interactive brokers being a little slow here. You're going to make around, a little under 2% in 43 days for promising to buy 100 shares of Cameco, $62 a share. So you got to have $6,200 in your account. I won't go into the details and everything, but, you could get a couple percent there to potentially take possession of 100 shares of Cameco. So if that's something that you like, I'd see it as probably a good trade here. But, RSI's hovering around 45, so it's, kind of in the middle. It's not overbought, it's not oversold. If it continues to go down, maybe you'll get a better opportunity to sell those puts, get a little bit more premium. But, it's things looking good. In terms of support, there is strong support at 62 as well. You have the moving average. You have this area here that we got over, went under, blasted through, nearly gapped through back in April, and we stayed above it. We knocked on the door of that 62 again before coming back up, and now we're just, a bit of a markdown period now too. So I would say if it keeps going down a little bit more, you sell those 62 puts. Might be maybe a good place to get in for to play it for a bounce. Agricultural ETF. Here's another one that he sees basing, and you could see. I mean, I don't even have to draw the line. You have it right here at 59. $59, 60, which is the level that he liked as well. So we're hovering around that right now. I mean, you could call it a quadruple bottom almost. So you have a good range here. You have a good range between the 60 level and call it 66. Right. So we've been bouncing around there for over a year. Are we going to continue bouncing around there? Probably. We could take a look at the fundamentals of the ETF, and of course, my chart doesn't update. Come on, Interactive Brokers. Get it together. There we go. Corteva, Deere, Archer Daniels, Bunge. I've never heard of Bunge. Tractor Supply, Ingredion Incorporated, CF Industries, Alamo, Federal Agriculture Mortgage, CNH Industrial. So, agricultural sector. I don't follow the sector that much. I don't follow this ETF that much, but looks like it's in a pretty decent trading range here. So could probably pick some up here, sell them at 66, and, looks nice. Looks nice. And, we've broken through that. That 60 is probably going to hold support quite well because, it's been in that area for a long time. So you got a lot of people holding it since there. So I have no, obviously I don't know the future. None of us do. This isn't advice. Do your own due diligence, all of that good stuff. But it's looking pretty good for a basing pattern. So Canadian Natural, I do hold some oil stocks. I am quite bullish on it because it's energy we need. This was a past pick of his that he saw, a large breakout, right? You could see it right here. You look at it on the chart, that 40. There was a split as well on this. So again, another reason I like splits personally. He sees it as increasing volume, but me as an options trader, it allows, an options trader with a, smaller account than big institutional guys. It allows me to kind of come in and, take possession of 100 shares at a much more reasonable price than I think it was a 2-for-1 or 3-for-1. So, it's getting up to like 8, I think it was a 2-to-1 split. So if it was around 80, well, now it'd be around $100, so that's $10,000 if you're taking possession of 100 shares following, say, a put assignment. Now you're down to $4,000, back there, I'm looking at my line here, but it's at $50. So you're looking at $5,000 to pick up 100 shares. So much more reasonable, depending on your account size, of course. Everyone's account size is different, obviously. So, but, splits do help smaller options traders like us acquire shares at a more reasonable price for with respect to our account size. So I like it. I always like splits, even though it doesn't change the fundamentals of the company whatsoever. So, but he was playing this breakout, broke out over the 40, knocked on its door again, and then just blasted off, hit 56. Now it's come back, and you see the moving average, right? It knocks on the moving average, coming back. So we're going to see some resistance again here at the 50. Our RSI is still not particularly overbought, so still looking pretty good there. But you'll have some decent support as well at the 45 level. You could see it right here because we touched it, we blasted through it, kept going, knocked on its door. So you could be sure that that 46 level will probably hold, but who knows, right? So I believe that is it for today. Happy Independence Day again to our American friends. Thanks so much for watching. If you like this type of thing, please support me just by a like, subscribe if you want, leave a comment. Am I out to lunch on some of these analyses? Let me know. What do you like? What do you don't like? Any comment is a good comment in my opinion. So until next time, which will be tomorrow, Friday, have a great day, and thanks so much for watching. Take care.